Hello everyone, and how are you? Today we are going to go into a stock called AHT.L Group. Now AHT.L are a plant hire, so as we know, construction has just gone through the roof over the last pandemic. So the last 18 months it has continuously gone on from strength to strength. Now AHT.L Group are a plant hire company, and they produce plant hire for in the UK, US, Canada. They're pretty global. They were founded in 1947, and we're going to go into a little bit of detail and have a look on why they've come up on my radar and why I'm looking to place a trade with them. So anyone who has been watching my webinars or following my tutorial stuff for a while now will know that this is something that's highly on my radar, is that it's trending nicely. Now, yes, this is trending nicely, but it may be a little overextended, and we can only ever live and die by the trade that we take. So we can see that this is trending nicely. Look at the highs. The highs are getting higher, as we can see here. I'm going to see the lows. The lows are getting higher as well. So this means this is trending quite nicely. And what I will do is I will get a trend line. So I'll go get a segment, make it nice and thick. Start somewhere there and just draw this underneath there. Okay. Now what I'll do is I'll just zoom out and have a look and see, does this work any lower? And it doesn't. So we'll have to pop that there, and we can see 1, 2, 3, 4, 5 touches. Okay, so that's pretty decent. That's something that we're looking for. Now, for anyone who doesn't know how to trade cyclicity, so this is how I would trade cyclicity, and I'll just draw it in for you guys and show you how to see it. So cyclicity is always, phase 1 is always the big movement. So from there to the high is phase 1. Then we're going to draw in our phase 2. I'm just going to make it red. So there's our phase 2. And then we're just going to draw in phase 1 again. Start at the bottom. I'm going to go the whole way to the high here. Now, my definition for a phase 2, it needs 3 bars getting lower. So look at that green one. That's bar 1. This red one is bar 2. This is bar 3. And then there's another one here, so bar 4. So this one is lower than that. So there's always, you need a minimum of 3 bars getting lower for a phase 2. So there's that low. We continue with this phase 1 up to the very high. So we're always going to the top of the wicks and the bottom of the wick. So whatever's the lowest. So that's the lowest point. So I'm going there. I'm not going to here and then back up. I'm going to this one because that's the lowest point. Doesn't matter whether it's the bottom of the candlestick or bottom of the wick. As you can see up here, the wick is, I'm at the top there. So we're always going to the top and the bottom. Change the color. This is red. Now we have 1, 2, 3 bars going down here. So this is a phase 2, the minimum requirements for a phase 2. But for me, this is all part of that phase 1. It's all part of that continuously phase 1. So I'm getting rid of the noise. I'm getting rid of all the little small indiscrepancies that's in the middle of that. Okay, so there's the phase 1. And now we're back into this phase 2. Perfect. Now, phase 1, 2, 1, 2, 1, 2, 1, 2. So that's one cycle. So phase 1 and phase 2 is called a cycle. There's 2 cycles, 3 cycles, 4. So we've 1, 2, 3, 4 cycles there. And we can see that we've had previous cycles as well. So it's continuing to do that. It's following that same pattern over and over again. Now, the probability of ever having a trade. Okay, so the probability of this trade winning right here. Now, any one-off trade has a 50-50 chance of winning. Okay, so it has a 50-50 chance of winning, and all we're trying to do is add a little more probability in its favor. But once you add in a pattern, okay, so it's hit the floor there, bounce once, hit the floor there twice, bounced, 3 times bounced, 4 times bounced, 5 times bounced, and now we're back here at the 6th time. So it means it gives probability a little more advantage. It gives us a little more to the upside at that point. So instead of it now being a 50-50 trade, it's now weighted a little more in our favor. Now, like I say, we are a little bit overextended with this trend. I would have liked to have got this much closer down here, but again, it is what it is. So the idea is that when it's coming down, hits the floor, we're anticipating that it's going to turn. So what I want to do is I want to pop in my entry and my stop loss. I'm going to take this as a CFD trade. I'm not taking it as an underlying asset. So a CFD trade is I'm taking a bet on the outcome of this particular trade, or I'm taking a little bit of a gamble on it. I'm taking a little bit of an educated guess. Okay, that's what it means. So I also want to put in a horizontal level. So I want to change this to black. So if we look here, we actually have support and resistance. So it hit its head here, come back down. It went up, hit its head, it come the whole way back down. It broke through there, and now look, it's retested. So this is called a break and retest. So we have that there again. So we're looking at this particular trade. Now, before we go into and place the trade, we want to have a look at the actual finances on the likes of this. So I'm here on Yahoo Finance, and I've clicked on finances, and now income statement. So if we look at 2019, or we'll go back a little bit further. If we look at 2018, we had 3.7 billion was revenue. Then in 2019, we had 4.5 billion. 2020 we had 5 billion, and 2021 we've had 5 billion again. So it has increased 1, 2, 3 out of the 4 years so far. So it hasn't increased in 2021 yet, but you know what I mean, it's more or less identical to what it was in 2020. So that's pretty good news regarding what's after happening over the likes of the pandemic. Next thing we want to have a look at is balance sheet. Okay, we'll have a look at the quick look at the balance sheet, and what we want to have a look at is we want to have a look at total liabilities. So we can see here that 6.7 billion total liabilities. We want 8.3 billion, 10 billion, 10.5, and we look, it's continuing to grow, which is there's more liabilities, or sorry, total assets. So you can see that it's growing, and then we have 9.2 billion in total assets. Okay, so that's where the assets have come down here from 10.5 down to 9.2. Okay, so next thing we want to look at is total liabilities. So down here we have total liabilities. So we've total assets and total liabilities. So 4.2 billion, 5.5 billion, 7.5. So we can see that these total liabilities are going up, but again, in accordance with the total assets, it's actually going down here. So if we look at the likes of the total liabilities and we look at the total assets, if this company was liquidated in the middle in the morning, there's 3.2 billion in assets that would cover the total liabilities. So that is pretty decent. So back to the stock price. So that means then we have a little bit of fundamentals to back this up. We have our technicals here as well. And I know some people want to have a look at the PE ratio. So go back to summary. And we look at the PE ratio, and the PE ratio is 34. Okay, so that can potentially be a little bit high. But if you're looking at the tech sector is about 30 to 36. So it depends on your what would you call it, your metric for the likes of using the PE ratio. Now the PE ratio could be high here, 34, because there's a huge demand on this stock. Okay, because we can see it's trending nicely. Sometimes that means that there's a huge demand on the particular stock. So what I'm going to do is I'm now going to place my trade. Now I never get into a market live, so I'm going to see this line? I'm going to bring this down. So what I want to do is I want to put a little bit below this line. So see the bottom of the stock, bottom of the bar? I want to have this horizontal line a little bit below it. Okay, so I've left a little bit of daylight underneath. As you can see here, there's a little bit of daylight between it underneath. And what I've left is the spread. Okay, so we can have a look at this. So I've left the spread. So I've left that underneath here. And what I'm going to do is I'm going to get another horizontal line. And I'm just going to pop it a little bit above the bar. So just say about there. So there's my entry and this is my stop loss. So a little bit above, a little bit below to allow for the spread, the cost of getting into this. Now what I'm going to do is I'm also going to measure from here the entry to my stop loss. And that says in the bottom left, seeing the brackets down here, it says that is 2.1. And if I go to the record high here, that is 7%. So that means then I have a 3.5 to 1 winner by the time it gets to that record high. If it gets to that high, so which means then the risk to reward there is pretty good for me. I'm only ever looking for a 3 to 1, so 6.3. So it only has to hit there for me to have a 3 to 1. So that's my risk to reward. So risk 1% here, looking for 3% reward. Now we have that all set up, and if we have a look at portfolio here, just to show you guys, I have 30 grand or 21,000, 24,000 altogether allocated in my accounts. So we have 18 of that invested in stuff. So 10 of that I use for trading. So 10 grand is what I'm going to put on use as a guideline for my trading. Okay, so go back to chart, entry, stop loss. So I'm now going to click on the trade. So I'm buying this. I'm looking to buy this. I'm looking for this to go up. Now I'm not getting in live because what I'm looking for is I'm looking for this to happen. I want the bar to open here. Hold on there. I changed that. Go to the doodle again. Okay, so what I want is the bar to open there and then go up. So I want that to go up like this. So obviously the bar opens there if that's where it closes, and I want it to go up like that. So that's what I'm looking for. Now if the bar opens there and goes down, I am not triggered in. Look, I was never triggered into this point. So it means that does not cost me anything. And if this happens, because this is now made a lower low, I am now cancelling the order. Okay, so it depends on what happens next. If it goes up like that, I am now triggered into the trade because it's hit this point and I'm up here, I'm in a bit of profit. Now if it comes the whole way down, I lose my 1%. So this is what we're looking to happen. That's what I want to happen in the trade. But again, if this happens, it means it hasn't cost me anything because it hasn't hit this entry point. So I'm looking to press the buy button. So I never click on trade. I'm always using a pending order because I want the market to turn. I want to be in as it's turning into a phase one. And we can see here 5,375. So 35275. Sorry, there wasn't 2, there was 75. 3575. And if you want to put in the 0.39, you're more than welcome. 0.39. So that's that. My stop loss is now 5267. 5267.44. Okay. Now that tells me that I'm using a position size of 2% of the market. Now because this is going to be a CFD trade, so X1 means that I'm buying the underlying asset, I'm going to change that to X5. Now it tells me that I'm using 150 quid, and it tells me that my take profit is going to be 15,000. Now I use 1% of my account, so if I'm trading with a £10,000 account, what's 1% of 10k? and that is 100 quid. So it means then I need to change this to £100. Now I never click on amount and change that. I never change that, because if I press the minus button on this or the plus button on this, bring it down to 100. Okay, go back to rate. My stop loss has now changed. Look, my stop loss has now changed. So I never want to do that. So 5267.44. So that's where my stop loss should be. That should never change. Okay, that never changes. Now, so what I'm going to do now is I'm going to see this 150 quid. I'm going to press on the amount, the minus button. And now look, it's down to 103. So if I change this to say 10. I shouldn't have put the 0 in there, should I? Nope. Okay. Change that to 1. Change that to 0. Change that to 0, 0. Right. And see this is still above my 1%. So I'm not happy to do that. I'm not happy to risk that. Okay, cool. So that's that there. I've now worked it out. So how this works out is that out of my 10 grand that I have in my trading account, the broker is going to take 990 quid off me. So there's 990 quid that the broker is going to take from me and hold in case this trade loses. If this trade loses, they're going to take 99 quid off me. They're going to take 99 pounds off me if this trade loses. And if this trade loses, they're then going to give me rough maths here, £890 back. Okay, so this is a loan, this is money that this is the deposit that the broker is going to take off you, 990 quid. And if this trade loses, they're going to give you back £890. Now the last thing I want to do is to take profit. Now click on amounts, and if I'm risking £100 here, my take profit is always 300. And that's because of the risk to reward. Okay, so if I pull up a calculator, here for you guys, and we're going to work this out. So just say we place 10 trades and we have 7 trades at -1. So that's -7, okay? That's -7, so you've lost 7%. So 7 by -1, so remember we're risking 1%, so that means you've lost £700. Okay, clear? So we've lost £700 over those 7 trades. Now, just imagine you had 3 of those, so you had 10 trades, so 7 were losses and 3 were wins. So 3 of them were wins multiplied by 3%. So 3 threes are 9. So that means then overall you've made £900. So £900 minus 700 equals overall you've made £200 over the 10 trades. So you've made 2%. And that's the idea. And that's why we're looking for a 3-to-1. So even though you've lost 70% of the time, you have still made money. And now look, set order. So I've now set that order received. So that means that order is set there, it's all set up, and I'm just going to leave it there. Now, if you want to know more about the likes of this, go to henry-ward.co.uk, sign in, and there's actually a free trading program. Okay, so I have a free trading program for people. This is a course, and look, there is loads of modules here, and they're completely free. So there's 12 modules. And within these modules, there's topics. So if I expand this up, look, we've welcome webinar. If I expand this one, we then have the broker. Expand this one, look, there's 6 topics. I click on this, we have the FX market, the indices, stock market, fractional shares, cryptocurrencies, and ETFs. We expand this up, we have underlying versus derivative. So what we've done is we've done a derivative, which is a CFD trade, and then types of traders, and then there's a quiz, there's a test, and so on and so forth. So look, pips, spread, price action, buying and selling. Then we have trends, cyclicity, highs and lows, uptrend, and trend lines. And this is all completely free. Moving average, EMAs, and then another test. And then we're getting to the last section, support and resistance, hard and soft levels, markets at all-time highs. So this is how I trade. This is the strategy that I use. Expand margin and leverage. So what we've gone through today, trade in much more detail. Okay, risk managed, so making sure that you're not over risking on parts of the trade. Then we have underlying asset, how to trade the underlying, so you're actually buying the physical stock. Then you have derivatives on the web trader or MT4 up, and then it's brought me to the module by mistake. So let's have a look what it looks like. So just say underlying asset versus derivative. So it says I have to go back and click the topic. So support and resistance. So it's making sure I go back to the beginning. So the free course mark is complete. So it's not letting me open these up till I actually complete the course. Look, we're into the next one.
Stock market.
Okay,
so the stock market is one of the biggest traded as normal, even if the
this is the idea. And then,
country that will
so
vary.
But
the idea is that we get into the market when the market opens.
So then we're on to the next topic. And that's the idea. It's all there for you. All you have to do is just jump in on board. And now we're into cryptocurrencies, ETFs, so on and so forth. Okay? How trading works, test, ways to trade. And look, every time I try to jump forward, it won't tell me, it won't let me. I have to go back and I have to mark it. I have to mark it as completed. Okay? And that's what it keeps bringing me back to where I should be. So which means then that you can't jump the course. You have to do the whole course and then mark as complete. Okay? And this is the way it should be done. People like to skim. People like to jump. Make sure that you're following the process. Make sure you're doing what you should be doing. And that's one of the things that I do all the time, is make sure you're following the structure. Okay? And there's derivative versus underlying assets. So that's a huge topic. That's a topic we've just gone through. How to place a CF3 CFD trade versus
the most important
underlying asset trades. Look, you're buying the
ways of
underlying asset. It's going into the pretty much detail, and we're going through it.
Asset, and it starts going.
Okay, so henry-ward.co.uk. That's where the free course is. This is the stock that I'm looking to trade. Order is placed. It's in place now, and let's see what happens. Exciting, isn't it?